Hi, I'm Dave here at Fledging Financial. I just want to provide some basic information on personal finance. Today, I'd like to talk about market timing. And people try it, but it's largely impossible. So I want to share information on what's an alternative to be able to do that. So let me share the screen and first show an information graphic from Visual Capitalist that says why people, would like to market time. So the areas in blue are essentially the up markets, and what with market timing is people want to be able to time their investments to be able to invest when it's essentially market lows so that they can essentially just get the gains. And, if that was possible, you could make money over the long term. The problem is that it's almost impossible to really time the market. So with the market going up and down, you don't necessarily know when the good days are going to happen or when the bad days are going to happen. So it's desirable to try to pick those. But if you miss just the 10 best days in a given year, you can lose essentially half the returns. So if you just invested in all the days, you would essentially get the market return. And if you only invested on the 10 best days, that's essentially half that. So if you spend most of your time on the sidelines and you miss like the 60 best days, you barely get any gains at all. So by keeping money on the side instead of keeping it invested in the market or taking it out of the market when it goes down, you're essentially guaranteeing you're not necessarily going to get the returns of the market. So this relates to behavioral finance, and timing the market doesn't really work. So what is better over time, as shown, is to stay invested. So how do you do that? Well, instead of trying to time your large investments, what you'll do is time your individual and smaller investments. So use dollar cost averaging and invest a set amount every month. And what will happen is that your average price will always be essentially lower than what the highs are. So it's a guaranteed way where you'll buy more at a set amount when you have low prices, and you'll buy less essentially when there's high prices, so that your average cost is always lower. And this is a proven way to be able to get better returns over time. And it's more representative of how people can actually invest, because no one has $100,000 lying around that they can move in and out of the market. What you likely have is get money from a paycheck and have $100 a month that you want to invest. So take the $100 a month and invest it in yourself and your savings, and you're guaranteed to essentially stay in the market and get the full return of the market, and also have a lower cost than what you would otherwise have. So please, don't try to time the market. Figure out what your asset allocation is that works for you. Set that asset allocation up, and then invest in stocks over the long term every month. And in time will be your ally. And you'll see from the original chart that the overall trend is up. So as you dollar cost average, over a period of 10 to 20 years, the market is, will return positive returns for you. Anyway, so I hope this information is useful, and hope to see you in another video.